Hello, hello, and welcome to another episode of the Awesome in Seattle podcast. This is your host, Christian Nossum with the Awesome Nossum Group at Wilson Realty. And today we have a very special guest. And the reason that he's here is because he knows his stuff when it comes to helping buyers buy a condo. So we have the one, the only, Mr. Dan.Keller, New American Funding.
I feel like I've never met you guys. I'm super uncomfortable here right now.
Only been working together for over a decade.
Yeah, you and I think Joanna is the most friendly person I've ever met in my life. So it's all good. This will be fun.
So today we are talking about some major changes in the condo lending regulation space. Now these all took place September 2023. They really haven't got a lot of airplay. Not a lot of headlines, and it's pretty shocking to those that understand what these changes are. So we did an episode about a year ago, almost a year ago, going over these changes, but that was geared more towards sellers and current owners of condos and the association. Today, we're taking a different angle, a different approach, and we are actually helping you, the buyer of a condo, really understand how this affects you. And it's going to affect you. So you really are going to want to listen to this. So, our other guest here today is the awesome agent, Joanna Beecher.
I was hoping you were going to say me. Okay. Hello.
She is here as well as my co-host, and she is with the Awesome Nossum Group as well. So,
AKA Condo Queen.
Condo Queen.
Yes.
I think killing it.
Yeah.
You are.
Well, the Condo Queen is here to ask you, Dan, can you give a brief background on why these rules were put into place and what the new rules are?
Yeah. Well, the really good thing about today is you and I have worked on a lot of condos together, right? And so we've got not only the book, the rules, the regulations, the guidelines, but we have the experience, okay, for perspective. So why they got put into play, what was this, a year? Gosh, has it already been a year? It's been over a year.
Yeah.
So they had a condo collapse in, I want to say Miami, Florida, right?
Yeah,
Miami.
2021 is when that happened.
Yeah, and it was ugly. And
it was horrible. It was catastrophic. It was not a good thing.
Yeah, there should have been processes and regulations in order to prevent that, okay, from people buying or during the buying process. And so Fannie Mae steps in and says, hey, we need to tighten up our condo guidelines, as if they weren't tight enough as it is. There was some loopholes, okay?
Yep.
The main loopholes were in insurance and deferred maintenance.
Yep.
So those are the two big things we want you as a buyer to listen to and pay attention to, because this is going to help you 5 years from now when you call up Christian and Joanna and say, hey, I need to sell, or we're looking to move up or move out, right? And those could get in the way of you and your resale value. And so let's go back to 2 years ago, why these were put in motion. Because of the collapse, they found out, and there were other condo cases that came up where they had issues or catastrophic type issues. There was a lack of insurance.
Yeah.
So the
I remember you telling me there was one in California where there were wildfires, burned down the whole complex. It was a $170 million complex, and they had like $1 million worth of rebuild coverage or something.
$4 or $5 million in coverage. So severely underfunded, right? Yeah. And they have found that all over the U.S. And so what they've done is they've just upped not only their awareness, but their audit of the master policy. Okay. The other thing is just structural. Like, are there bids for upgrades or repairs or renovations? And if there are bids, then that's public knowledge. And so they want to make that available not only to the consumer, the buyer, but also that's a part of the approval process now too. Yeah. So deferred maintenance is a big thing, hence those bids. And then so you've got 1A is deferred maintenance. Number 1B would be any bids for deferred maintenance. And then the insurance master policy.
Yep. And what are the amounts of the bids that cause a red flag that buyers need to be aware of? And so what we're talking about, so let's pretend like you need a new roof on the complex. That's a shared expense between everyone in the condo. When that shared expense, when there's not enough funds in their reserve account, their bank account, to pay for it outright, they charge what's called a special assessment. Every unit gets charged a bit of money, their portion, to pay for that new roof. I know there is a number, so I'm going to ask you, Dan, what is that number of special assessment? What's the amount?
Yeah, without going into detail or too deep, let's just call it what it is. It's $10,000 per unit.
Yep.
Okay. So a great example, like you just mentioned, let's say there's 5 buildings and there's 10 units in each building. So 10 times size is 50 units.
Yep.
The maximum number of repairs in that special assessment cannot exceed $10,000 per unit.
Yeah.
So it's just your reverse engineering. The condo department is going to do that at the lender. But we send out, there's a condo questionnaire that we send out in advance that really helps with us figuring out the state of that condo project and that HOA.
Yeah. Yeah. And this is a big deal. I mean, this is why really buyers need to understand what they're buying into, because you are going into partnership with this HOA that you're buying into. While the condo is a less expensive opportunity to buy in a neighborhood, you're joining someone, the HOA, in the responsibility of taking care of that complex. And you want to make sure that it's a healthy, well-run complex organization.
Yeah.
And these guidelines are in place to help them.
They are. Before we get too deep too, anyone listening to this is like, whoa, but I'm putting down 20 or 30 or 40%. I'm going to be immune to this, because that's the old adage, right? If I put down more money, then the lender will look the other way. No, nobody's immune to this. You could put down 90%, literally a ton of money, and it doesn't matter.
Wow.
I think the only way you are immune to this in some way is if you pay cash, but you're not immune to it when you sell.
Yeah.
Correct. Yeah. And that's even more risky, in my opinion, to pay cash for a non-warrantable condo. But yeah.
And this, I'm going to touch on this later, unless that's an opportunity.
Yes, correct.
We'll touch on that in a minute. So since this is such big news, are you seeing, because obviously we're real estate agents, you are not, Dan, but you work with hundreds of agents across the Seattle, Puget Sound area. Do most agents, in your opinion, understand these changes?
No. No. In fact, Joanna and I are working on a deal right now with great clients that you've shown probably 100 condos to. And I believe the listing agent had no clue.
Yeah.
And I talked with Joanna, and Joanna's like, she was like, well, he thinks it's going to be okay. And I'm like, wait, you listed a condo thinking it's going to be okay. So no.
I want to say on that note, with the multiple condos that I have shown just this particular set of clients, the amount of agents that had no clue, no idea as far as the new HOA regulations was shocking to me. The fact that my client, through working with Dan and myself, had more knowledge than all of the agents put together. I mean, that's scary. And I, in speaking with these agents, being shocked that they didn't have this information in their back pocket, the amount of information they didn't have available to me and to my clients, or to anyone who was looking at this or their condos, was very surprising. And I just thought, you're not doing your sellers, you're not doing your duty for your sellers. And it was upsetting to me for their sellers, because there was just so many things that were in blind spots. And I don't find that okay.
Yeah. Well, I think this is in life in general. When you know what you're supposed to know and others don't, yet they get paid the same amount. It's kind of like going back to school. You're on a group project. You do 90% of the work and they get the same amount of credit for it. It's kind of what's going on here. It never really feels great.
No.
Yeah.
No, it was shocking and upsetting, and and here we are. We're working on a deal right now where the agent isn't sure, and I'm really hoping.
But they think.
I really hope that what they think is
it's
correct.
Okay. I joke about this all the time, but you remember when President Obama ran for office, and he ran on hope, right? His slogan was hope. So I always say this: hope is a horrible strategy unless you're Obama.
Yeah, exactly.
Right? Hoping this is going to be okay is not really great.
When it comes down to numbers, there's not much hope. You got to actually know what they are.
A lot of gray area there.
A lot of gray area. But Joanna, to your point, we can only do our best, which is it's up to us, and we're well prepared. I was presenting classes on this before these guidelines even came out. I'm here in the Seattle and East Side markets. We finance a ton of condos. And so this was a big part of my business, being able to articulate what these changes mean to buyers and to realtors. So, there's a lot of changes. You mentioned earlier, and I think it's worth talking about too, that there hasn't been a lot of media coverage or a lot of attention on this over the last year. Joanna's example is why.
Yep.
Real estate agents aren't paying too much attention to it, and they're taking more of the reactive approach. Oh, shoot, we got an offer. Oh, shoot, there's a transaction here. Oh, crud, it didn't work out.
Yeah.
Versus the proactive side of it. And the media hasn't done a great job. Maybe the media could pick this up and talk about it. But this is a big deal since a big part of the first-time homebuyer market in Seattle are condos.
Yeah, it really is.
It's not clickbait. That's why it's not being talked about.
Yeah, it's not sexy.
It could become clickbait, but but I think we kind of were just getting into this, but how is this going to affect buyers and what questions? I think this is key here is what questions, should they ask to find out if a condo will qualify, if you're not working with the condo queen to guide you, what questions, is like reserve, special assessment, hazard insurance. What do you think, Dan?
Well, if you're a buyer's agent like you, in this particular case, and you're a buyer looking at condos, I would want to look at the condo docs. I would want to look at they call them the resale certificate, the condo docs. So typically those are available for you to look at. The lender can actually pull this up on the Fannie Mae website and see if it's already approved, meaning have there been units in that condo project that have already been financed in the last year. And if they have, cool, it's on the approval list. On the contrary, there is also a naughty list. So if it's on the naughty list, so Joanna does this with us, and that's one of the benefits of having a lending expert with condos is you can call or text. Any of my agents can call or text me, and we'll look it up before you actually write the offer.
Yeah.
So you're not wasting your time. You're not getting your client's hopes up. But then there's an educational process. I've got 5 slides in front of me that I've taught this on. We send this to our clients so they know in advance. I send them a video that I've made on this information well in advance. If Joanna and I are working with a client and we know that they're going to be in the condo market, our buyer's consultation, our mortgage planning consultation takes a right turn at pre-approval to educate them on this particular purchase versus just going, hey, we're just getting you approved. Good luck.
Yeah.
Exactly.
Education's key. So I guess to answer your question, being proactive with education is key.
Awesome. So we're asking questions about resale certificate is the big one. We're asking things about reserve studies, and always refer back to your agent, back to your lender to make sure that they have everything that they need. And that will guide you very well.
Yes.
I think one other question, because we're seeing this, and I'm probably jumping ahead on your questions, but we're seeing this as the culprit, the main culprit, and it's insurance, the master policy. So getting an idea of the coverage of that master policy up front is so big. Yeah.
So thank you for that, by the way. Buyers, here is a quick tip to help you out. As Dan was saying, don't waste your time on things that don't qualify. And that's where if you're out looking and your agent can dig up, HOA documents for you to help you even know if you should go out to visit or tour that condo, get that information ahead of time so you don't get your hopes up on something that's not going to qualify, because it's not always going to be clear. Even if you go to an open house and you talk to the agent that's listing it and they don't know, once again, there's a bunch of your time that you can't get back, right? So, you don't, another tip, you don't want to waive your financing without knowing if any of these things, just aren't going to qualify for you.
Yep.
Which is a big piece that we will talk about too, as your agent, as your lender. If something isn't complete with like HOA documents and everything like that, waiving financing is a big no-no.
Yeah. And that's a huge thing when this market is so hot. A lot of buyers are waiving their financing contingency if they're pre-underwritten, if they're smart. Some are waiving it with just being pre-approved, which is not wise. But probably not the best idea to do that on a condo that is iffy, where the agent thinks it's approved. you should go in knowing for 100% that you know that it's going to be good to go.
Which I will say on this deal that we're speaking of that Dan and I are in right now, we did not waive our financing on this because of that. And it was potentially a competitive deal that had not passed a review date. It didn't even have a review date.
Yeah.
And I think after speaking with the agent and, basically questioning him on the HOA information, we did not get any pushback on having the financing contingency in there.
Yeah. So let's talk about this right now, because I think this is very applicable info to a buyer. This particular property is not on the naughty list, nor is it on the approved list.
That's a good point.
So it's a great point. It's kind of where we were a year ago because it was a clean slate, right?
Yep.
And so what we're doing here at this point, we've requested the condo questionnaire. It's a form from New American Funding. We've requested the budget and financials, and then we've requested a copy of the master policy. And that will get our condo department, not our underwriter, our condo department will review all of that. And then here's the great thing. Let's say we approve it, boom, now it's on the national approved list.
Yep. And that's huge. That's a big deal for
And
every
then
buyer.
you guys can now take it to that condo project with some marketing material and say, hey, we got this approved.
Yep.
We'd be happy to help you. So that's,
exactly.
There's some other things that we're seeing. The elite, the professionals in our industries you're seeing them rise quickly to the top. And
The
tough
ones that
markets like
understand.
this,
Yeah.
they weed out the weak.
So I got a question about associations, Dan. Because we talked about this once before on the podcast, and I didn't ask this question, and I actually re-listened to that episode in preparation for this one. Can a condo association prevent getting in the situation where they have $10,000 or more in special assessment coming up by having, there's 5 buildings with 5 roofs on it? Could they say, hey, the first 3 roofs we're going to do at one point, and it's only going to be $8,000 special assessment. So we're under the 10 grand. And then once that's done, then we're going to do the other 2. And that's only going to be like $3,500 per unit. Now they're under that 10 grand per unit. Is that a way they can kind of circumvent these $10,000 like limit?
Yeah, there's 2 ways to answer that. So the number one way, and the key to this, is leveraging the reserve study. Okay, so if an HOA is properly managing their condo project the way they should be, annually they should have a reserve study. And that's done through a neutral third party through the city or through the county, where they come out and they do an audit. And they tell you the life left on the roof, the siding,
It's a crazy report. It's kind of like an inspection report, except they are telling you exactly how long each thing, each piece of the property is going to last. The concrete, the siding, the handrails, the mailbox, the windows, the roof,
the decks.
everything.
Yeah.
The decks.
Yeah.
Every single piece is broken down with the expected lifetime left on it and the expected cost of that repair.
Cost of the repairs, and then what to do to maintain to keep it at a certain
extend
level.
its life.
Yeah, to extend its life. So I think the number one key to that is a reserve study. Number 2, part of us getting these projects approved is being strategic. Like you are going, hey, okay, let's see if we can rework the master policy. Let's see. And that's really tough, by the way, because insurance costs have skyrocketed. Yeah. That would cause your HOA dues to go up. But working through some of those things strategically. And that's another, not a plug, but another reason to use a local lender that actually has a condo department that's willing to go and put in the work in for local condo projects and real estate agents. And again, I think it just helps build community because it helps keep and maintain the resale value of these condo projects, these condos.
That and speaking to a local lender when it comes to working in condos specifically, I think is really important because you understand what's happening in that market in a whole other level when it comes to condos, because condos are great, but they are complicated just because of the HOA information. So if you have somebody who's not familiar with that area, your deal can go south in a way that maybe if a local lender was taking care of your loan, it wouldn't. So very important.
Amen.
Yeah. Christian, what do you think? Do you think this will have any effect on values?
Yeah. So these condo associations that are on the naughty list are going to have a tough time selling. And the ones that have to sell, they're probably going to have to sell at a discount. That sucks for them because this probably could have been avoided had they planned ahead. But this is a new regulation that came into effect again September 2023. So if someone does have to sell and they're on the naughty list and maybe they have some equity in their home, so they have some room to potentially take a lower offer, that's where someone could come in with maybe an FHA loan as the buyer, if it's approved through FHA, which not all the time. They're not always approved because they have to go through their own FHA approval process. But this is where potentially as an investor or a buyer that has some cash, you could come in and potentially get a deal on a unit and then go help the association using Dan, maybe Joanna, to build it back up and get it back on the approved list, increasing your value along the way and buying a deal in the process, which I think that's an opportunity right there for the right buyer.
Absolutely.
Yeah. Cool. Anything else either of you want to say, Condo Queen or Dan the Man? Condo Man?
Condo Man. You mentioned FHA and VA a minute ago. The really neat thing about VA and FHA is they're approved up front one time and then that approval expires. And so that's where we've actually been able to do a couple of deals where the condo project did not meet Fannie Mae's revised criteria. However, it met FHA and VAs.
Yeah.
So not every deal is a dead end. You may have to change your financing type, but if you like the project, if your real estate agents feel like it's a good use of your investment, it's a good investment, it's not going to be damaged by these guideline changes, then you can switch financing like we have a couple of times to FHA and closed it, no problem.
Yeah. Yeah. And that's a great way. And this is why, again, you need to have a lender that understands these regulations because so many of them do not, just like the agent side. So many of them, I'd say 75% of the agents that I've dealt with, maybe it's lower for you because you probably talk to more, but I feel like the majority of them don't have any clue that these are going on, that these changes have happened. And it's been almost a year.
Yeah. I mean, honestly, there are so many condos in and around this area, and a lot of them have very old HOAs that haven't been, it doesn't look like touched or looked at in decades. And those are the places that are going to be this is where we're in at the deal right now. And it's going to be a rude awakening, and it would be, you want to make sure that you're up to date, that you have that fresh life that has been breathed into your HOA, to make sure that you're going to be confident moving forward if you're selling specifically, but buying as well, obviously. Yep.
That's important to know too, that a lot of the people managing these HOAs are not big companies with their full-time job is to manage the HOA. They're current homeowners within the association doing this on their spare time, right?
Yeah. They got elected because no one else wanted to do it. And
they don't know.
They don't know.
They don't know what they don't know. And so when you got a lender all of a sudden, or lenders and realtors all of a sudden bombarding them with all this info, so I would also say practice a little bit of patience as well and understand this, that your typical 20 to 30 day closing may not happen if the project's not necessarily approved and you have someone that might not be as available, right?
So they're doing their day job, and it's a smaller complex often in that situation that's self-run. They don't have a lot of overhead as well, which is a plus, and that's probably why the dues are lower. But they also don't know exactly what they're doing, so you kind of got to coach them.
And I'll even tell you this: over the last year, it's been funny. On two that I can count on, my team and I have actually gone and met the president of the HOA to help them with the condo docs.
This is why, again, huge reason why Dan the Man is the one that you need to help get your loan for a condo, because they will do that. That's way above and beyond. That is not common. So, Dan, thank you so much for being on today.
Thank you,
What
Dan.
is the best way for someone to reach out to you if they have questions?
Well, you know what we didn't do? We didn't disclose my MLO number, so I got to be official and make sure I stay out of our compliance department. But my name is Dan.Keller. I'm with New American Funding right here in Kirkland, and my MLO number is 115349. And
Niner.
Instagram is great. I'm on Instagram. I talk a lot about stuff like this over there. My Mortgage Guy Dan, but you could also just look me up online, mymortgageguydan.com.
Yep. Perfect. For Joanna Beecher. and myself, Christian Awesome. Thank you so much for listening to this episode of the Awesome in Seattle podcast. I hope you learned a lot. If you are a buyer and you are interested in chatting with us a little further to see if buying a condo still makes sense for you, you can do that anytime right on our website. Just chat with us. Totally free. There's no obligation. We don't pressure you to do anything. Clearly, we're all about education. That's why we do this. And you can do that right at awesomenossum.com/schedule. Until next time, we'll see you then.
Bye-bye.
Bye.